Welcome everyone to Diamond's Edge Live. My name is Greg Diamond, editor of 10 Stock Trader at Sainsbury Research. And this week I want to bring in financials. We're going to look at XLF, we're going to look at KRE, the regional banking sector. And what I want to do is look at how those setups in those two sectors are progressing with what we're watching, especially in semiconductors and the major indices, okay? Some of the big three stocks that we've been tracking, Advanced Micro Devices, Caterpillar, Nvidia. So what I want to outline are the various scenarios that we can look at with this week being important, next week being, all the tariffs that are going to take effect. Does the market shrug it off? Or do we look for a low after that, which creates even more fear, but into earnings, okay? And I'll get into why this is all important and exciting at the same time. It's not often that we get setups like this with so many different catalysts happening, all right? So let's jump into it. Let me share my screen here, all right? And let's look at XLF first. And what I want to focus on here is going all the way back. It's just been in this nice, steady uptrend for a long time, okay? And one thing I learned early on in my career is always watch the banking stocks, okay? If they start to top out before everything else, we saw this in the great financial crisis, we saw this in COVID during the earlier parts of COVID, that's usually a warning sign. But when they remain strong, okay, that tells you that the stock market, at least underneath the hood, is actually in a pretty decent position. Even if we see other things like semiconductors, having this long-term corrective move, all right? So we can see off of this March low, March 13th low, financials had a nice rally, okay? Let's call it, 2.5 weeks, all right? So the question I have right now is this, and I've been pinpointing this week is very important, all right? Is this going to be a lower high relative to this high back in early March, okay? Or did March 13th mark the low and then we have this correction, let's say into Friday where we have PCE and University of Michigan inflation expectations, okay? And then we just rally up into mid-May? Or do we have this another corrective move again, next week is likely to be volatile with this tariff announcement? Does that create the volatility for this ultimate low into late April? Here's something else I want to point out. And I've been talking about this with 10 Stock Trader subscribers for quite some time. If we see a low into earnings, into, let's call it the third week, maybe the fourth week of April, and you can quote me on this, if we see that, that would likely mark the low for the entire year. Let me say that again. If we make a low into earnings, that will likely mark the low for 2025. And that has to do with some of the cycle work that I've done, okay? Now, well, Greg, what about the opposite side? What were you thinking about in terms of if we see this March low here, and then we rally? Then we're looking at some type of a short-term top into mid-May. But that rally can be ferocious, especially in semiconductors, especially, in some of these other stocks that we've been looking at, all right? So those are the two scenarios that I'm looking at, all right? Either way, what we want to do is buy weakness. I mentioned to 10 Stock Trader subscribers on Monday, I'm on the hunt for weakness, okay? Whether that happens into Friday this week or it extends into earnings into April, I don't really care, okay? I'm accumulating shares. I'm looking to buy call options, all right? What does that mean into late April? It means we can get really aggressive. That's what that means, all right? All right, so back to XLF. Let's take another look at some of the scenarios here. Again, whether the low is already in or whether we have a situation where, it drifts a little bit lower into April. But we can kind of see here that we've had this, it hasn't really broken out, hasn't really broken down either, okay? So, is this a scenario where we see XLF do something like this? Let's say that this week does mark a top, okay? Or, let next week into the tariff announcement, and we have something like that, all right? Now we get back into that 200-day moving average, right around in here. We test these lows. Everyone has all this fear built up. It's the end of the world, but you're heading right into earnings. To me, the risk reward of buying this setup, okay, if this does happen, again, I think that would be the low for the year, and then we rally, okay? Not that doesn't mean that it's going to be, without some bumps, but this would be a very long corrective move all the way going back to late November of last year, okay? And, let's call it, what, 5, 6 month move, between 4 and 6 months, whatever. Even further if you look at semiconductors, but just on this XLF chart, we have this sideways corrective move, okay, that just simply worked off overbought levels, right? Didn't break out, didn't break down. We had this false breakdown here around the 200-day moving average, and then boom, we're off to the races higher. Let's also look at it relative to KRE. This is something that I highlighted to 10 stock trader subscribers. So XLF are the big banks, JP Morgan, Goldman Sachs, Morgan Stanley. KRE are the regional banks. You might remember back in March of 2023, Silicon Valley broke down. We can look at that chart here, going all the way back to, again, March 2023. This was where that happened, okay? Those banks are in KRE. Now, I like to look at the big banks versus the regional banks to see what are the clues. What is it telling me, okay? We can see a similar setup, although it's in a weaker position than XLF, but what we can look at here is a similar move, okay? So let's say, again, maybe we get a pop into next week, whatever, or a drop into Friday, a small rally, and then we continue lower into late April, into earnings, okay? We drop and then boom, right? That would give us likely, on the RSI, it would probably give us positive divergence. We'd probably see it in the composite index as well, okay? This is just a corrective move. If we get that low into April, I'm buying. It's that simple, okay? We can also look at some Fibonacci retracement levels. If we get down to into this low, do we have price support coming in on the long-term charts? In addition to extreme fear heading into earnings, okay? Wall Street likes to bring down their earnings expectations when they get scared. This would be the perfect time to start buying. Again, that is if we get that April low. If we have a low situation where March 11th has already marked a low, guess what? We get a higher low, and we'll likely see that in some of the other stocks I'll cover today. We buy that. So, again, this hunt for weakness, it's either in play with a lower, a low that we can see into Friday, right? And then the market discounts what's happening with the tariffs. Maybe it's not as bad. We saw on Monday, stocks really pop because it was going to be targeted tariffs. There's not going to be as broad as some people think. Now, maybe that changes. We don't know what President Trump is going to say. We don't know how the other countries are going to retaliate, if they retaliate, all right? But regardless of what that does, or what might happen in terms of those tariffs or no tariffs, or however it might shake out, if we want to buy fear, we want to buy that weakness going forward, okay? Whether that means the end of this week or later on in April, it's still a situation to start accumulating shares. So that's the banking sector that I really want to focus on. Now, how does that work? How do we take that one sector and then look at it relative to the other sectors? Well, I'll show you. If you've been a 10 stock trader subscriber for a while, you've seen me highlight this chart for a long time, okay? I'm going to keep doing it because it's that important, okay? And if you're just joining me, this is the semiconductor sector, SMH. Again, this has been in a corrective pattern since July of 2024. It has not broken out, okay? So you can see here, this is the updated chart that I have as of today, right? So if we think about what happened, XLF made a new high this morning and then kind of sold off, okay? But look at what SMH has done. You can see how I have this. This is the bullish setup here in red, this 1 and then this 2, okay? Does this mark the actual, this C is this big A, B, C, all the way going back to July. So what that means is, if this level, let's call it 210, and SMH holds this week, all right, you can see here, I've had this, 327, 328, right? This is Thursday and Friday of this week, okay? If this can hold, and then we can get through next week and we rally back above, what is that, 232.40, let's call it 232.50 in SMH, we have this third wave breakout higher, all right? That would be ideal in terms of, the low's already in, and then, we can rally. Again, if we see this into Friday, we have this weakness, and that doesn't last into next week, we can buy that weakness. We can hunt for those lows, okay? And that would rally. What's the opposite? Or what's the alternative? The alternative is in here in black, okay? And instead of the low already being in, we get something like this. okay, where yeah, this has a low, maybe we bounce into late next week, okay, and then we drift lower right into earnings. That creates this move, okay? So we have this entire, and I'll move this C wave down here so you can see it. But basically what this does is the entire move from July of 2024, this big ABC corrective move ends into earnings. And again, that would be the low for the year if that does happen. Why? Because it creates this long-term corrective pattern off of the lows from 2022 to 2023, and I'll show you here, right? So this whole move from 2022 all the way up until July of 2024 was this rally, and it took months, multi-month correction for this ABC corrective pattern to move. We get that low, maybe we break below last August low right here, this A wave, okay? Maybe that breaches into late April. Oh God, that's such a great buying opportunity. That is, again, likely the low for the entire year. I would get very, very, very aggressive with that, all right? Now we can also look within SMH, and we've been doing this a lot. I'm just gonna keep doing it, okay? Advanced micro devices. You know, this bottomed on March 11th, okay? Is this a corrective move, okay? Or do we, you know, you can see here, I highlighted this, this downtrend, right? We just broke above that this week, all right? Do we drop in? We have a little gap here from Friday to Monday, right? Do we fill this gap and then keep going? If so, great. If not, we get one more new low into earnings, right? Into April. And that tells me that that is going to be a low for the year in AMD. We can look at the same thing with Nvidia, okay? So you can see how I'm putting all this together between XLF, between KRE, okay? What is it? What are the signals giving me? We know banks have been the strongest. We know the semiconductors have been in this corrective pattern since July, all right? So now I'm looking at price and time, the big, larger corrective moves, okay, based on the rules of Elliott wave, all right? And then how is that going to play for the rest of the market, specific stocks in terms of when we start to get aggressive? Does that happen at the end of this week? Can we get through tariffs, or do we drift lower into earnings? If we drift lower into earnings again, I think that's going to be the low for the year. All right. So here we have Nvidia. Now let's see. Oh, there we go. Chart. There we go. Okay. So let's see if this is going to be a setup where we get the Elliott wave count similar to what I outlined in SMH, and there shouldn't be any surprise. Nvidia is the top weighting in SMH, so they have a similar look, but it would look like this. Okay. So let's say 1, 2, and then we get this third wave breakout, okay? And if March 11th marks the low, all right, maybe Nvidia drops into Thursday, Friday. If this low holds and it breaks above 123, let's call it 123, that would likely confirm the third wave higher, all right? So this is something to think about next week, especially in an important stock like Nvidia, okay? If this low can hold and make a higher low off of that March 11th low, this is something that would be a huge signal, not just for Nvidia, not for SMH, but likely the rest of the market that, hey, this thing's going to rally, and likely into mid-May. And we'll worry about mid-May if we see, you know, all these stocks start to break out. Now, a large part of this, which scenario is going to unfold? We have to wait for these catalysts, okay? We have inflation. I've already, you know, said it on Friday. We have inflation numbers, okay, PCE and University of Michigan expectations, and then next week is this big tariff announcement. What's going to happen? Well, let's just follow the price action. Let's let the market guide us, okay, rather than guess. Okay, we can manage our risk. Now, I've been very patient with subscribers in terms of what we're going to trade because I'm waiting to see what the market is going to dictate in terms of time and price, and then we have to factor in these catalysts, okay? So I'm happy to be patient. I don't trade just to trade. That's not, you know, that's usually not a successful long-term strategy, okay? So, and sometimes it can get confusing, especially, you know, these big wave fours, as I talk about, can be tricky. We can see that in SMH. So, you know, there's no rush to be able to say, well, I just want to trade. I want to do this. You know, this is happening. That you don't need to do that, okay? Be patient. Let the market tell you, give you a probability of what is likely. Do we have a higher low this week where we can trade the breakout, Or are we really going to hunt for weakness, but have to be a little bit more patient, into earnings and into April? Either way, I still like the setup. That's what's great about this technical strategy. That's what's great about understanding time. That's what's great about understanding Elliott wave. Okay, so this is Nvidia. This is obviously going to be an important chart to watch. Okay, we can also do the same thing with Caterpillar. Okay, and Caterpillar bottomed on March 4th. All right, you can see here we had this pop and then we kind of been trading sideways. Does Caterpillar make a higher high, okay, above, let's call it 353 or 352.50, okay? Does that break out next week? Or do we have a situation similar to everything else I've highlighted where, Caterpillar drops, it bounces into next week but can't break above, and then we drop into April earnings, and that marks a low. Totally fine with that. That's great. But keep an eye on Caterpillar. If it doesn't make a low below this March 4th low and everything else does, that sets up positive price divergence. That's a beautiful setup to trade. Absolutely beautiful. Okay. The other thing I want to highlight is the iShares Russell 2000 fund. So this is ticker IWM, and IWM here has a similar look. Okay, usually tracks pretty closely with KRE. There are some of the regional banks within IWM, but you can kind of see here that can this hold into this end of this week and then rally? Okay, or do we have another situation similar to KRE where we actually get something like this? And I think this is important with that April low, right? Watch this. 1, 2, 3, let's say again we can't break above, okay, 4, then we get into this April low, and I don't know how far it'll drop, it doesn't matter, okay? But what is important about this? So if you followed me since I've been doing Diamond's Edge Live, or you're a 10 stock trader subscriber, or even if you're new to both, okay, when we look at a fifth wave low within the rules of Elliott wave within a downtrend, that marks the end of the move, which means a huge rally. So if this high from November of 2024 marks, okay, and then we have a 5-wave count into the end of April, into earnings, guess what? That also gives me more confidence that we're going to see that low for the rest of the year. All right. Now, IWM is very volatile. I'm not saying it's going to be a straight line up and it's going to be easy peasy. However, this gives me more confidence. This count right here, if we can't break out, this would be a typical wave 4 before the wave 5 low. If that happens into April, that's where I'm buying. It's as simple as that. Okay. Let's also look at the New York Stock Exchange Composite Index. So this is basically every stock that's listed on the New York Stock Exchange, and you can kind of see this has a similar look to banks. Okay, it's been in a stronger position, especially stronger than IWM that we just looked at, or or the semiconductor sector. But let's take into account some of the dates. Okay, so this bottomed on March 14th. Once again, let's see if off this corrective move, and when you can see this corrective move, it dropped, it rallied, it dropped. Do we get more of this into late April? So again, we can look at all the similar setups. Do we get something like this into late April where it's it can't break out, and then we had that false breakdown similar to XLF? Okay, then we rally. This would be a typical corrective move off of a strong uptrend going all the way back to 2022, working off overbought levels. You get investors into a negative sentiment. We're already seeing that. Okay, everyone gets scared. Tariffs are the end of the world. Actually, you should be buying it because earnings are probably going to outperform, and that marks the low. This would be a textbook correction. Okay, well, what about mid-May? What if we already seen the low? Okay, that is where. So this is. Let me highlight this because this is hard to see. But so this in red would be the low into late April. Okay, again, this is all based on the rules of Elliott wave, and then I'm factoring Gann analysis. Okay, if we get a low into late April, boom, that's the end. That would likely mark the low for the end of the year, or for the year, and then we rally. What about April, or what about mid-May? Excuse me. Well, let me show you what that would look like. Okay, let's say we get a low into this week and then we break out. Okay, what would happen? And let's say we get into mid-May, which is an important, another important time frame. Okay, So what we would get here would be very, very tricky. It's still within a wave four. And if that's a little confusing, I totally understand. We'll worry about that if we get it. But what it would look like, instead of April marking the low, we would get this mid-May high, and then we would have one more scary drop, similar to what we saw in August of last year, into late June, maybe early July. That would mark the low. And what do I mean by that? Well, let's take this April move away, and you would still have this A, B, C, D, E wave four-ish like correction, okay? And well, what about SMH? Well, what would basically happen is, instead of having this move end in late April and we get this rally, this whole thing would, and I just move this C wave over into late June, July, and then that would complete the whole thing. Late June and July is also interesting because look what SMH did. This would be a 1 year full rotation that took the entire corrective move to complete in SMH. All right, so some of that is a little confusing, and I get it, but I'm giving you both time targets, price targets, okay, and trying to implement and trying to understand what corrective patterns we can look for across various sectors, across various different stocks, especially the important ones that I like to look at, AMD, Nvidia, Caterpillar, okay? So I'm giving you a framework of, look, if we get weakness into late April, that marks the low. If we break out from here, we can trade this rally. You know, it could last into mid-May. It would be a great rally to trade, okay? But a lot of that is going to be determined on very important catalysts, inflation and tariffs. And then we have to factor in earnings, you know, if we don't get that breakout. But the way that I look at it, the way that this is all structured, I haven't been this excited in a long time in terms of the trading opportunities, regardless of what happens. Now, again, we need to be patient, okay? We need to manage our risk, but these next few months are going to be so critical for the rest of the year, and it's going to be volatile no matter what happens, and that's where, you know, we really get a chance to shine in terms of trading long options, looking at some of the triple levered ETFs to take advantage of too. So, you know, I'm really excited about this setup. Again, I'll be hunting for weakness. So, you know, but I wanted to focus especially on banks because I haven't covered that and how that plays into what we're looking at going forward for some of the high flying sectors and stocks like SMH, Nvidia, and AMD. All right. So that's what I have covered for today. I'm happy to take any questions if there are any. Okay, let's see here. Is the collapse of Tesla only because of Elon's Doge blowback, or does it also indicate weakness with the company and the EV market in general? Well, I think that's a great question. You know, I think, you know, Trump said, you know, during the campaign trail, you know, we're not going to force people to buy EVs. I believe that he took the credit away just to kind of even the playing field. So, you know, it could be a combination of both. And I was actually having a conversation with this, you know, this whole Tesla thing with someone yesterday. And, you know, the market likes to discount what is likely to happen going forward. You know, the pendulum of politics swings back and forth. You know, is Elon going away from Tesla? Probably not. If he does, you know, would that calm things down and you know, have it be, you know, okay, this is a low, maybe. Is Elon going to leave Tesla? Probably not. But, you know, President Trump isn't going to be president forever. So does the market start to discount, hey, Tesla just dropped 55%. They're the leading car sales in North America. You know, this stock's on a discount. Let's buy some. So Tesla's always been a volatile stock. You know, we saw European sales drop 40%. You know, does that pick up? Do other people who aren't against Tesla or Elon or Doge or whatever start to buy some? I don't know. So I think you would think that some of this, you know, intensity would calm down, but we just have to see. But I think, you know, Tesla's going to be on my watch list because it trades just like a tech stock. It doesn't trade like a car stock. Okay, so we'll see. You know, we had a huge rally here. Okay, you know, does this happen with the rest of the market that we've been looking at, or the rest of the setup? You know, this is something to take advantage of here. Let's say we have this Elliott wave count. Okay, I'm not exactly sure. You know, do we get a pop? Okay, and this creates a small wave 4. We get a drop here into lows that have particularly been strong buy points for Tesla. Okay, you can see back April 22nd of last year marked a low. let's keep an eye on April 22nd. That would mark a 1 year rotation, kind of like we saw in AMD, a 360-degree rotation from a low to a low. This might be something to buy. Greg, are you seeing the upturn in overseas markets as continuing? Germany, Japan, China, that might be 10 stock trades in these markets. I tend not to trade Europe or China, especially China. But what it does do is give us insight into, everything is connected, all right? So when we specifically look at, let's look at the DAX, the German DAX. This has been on a roller coaster ride. Excuse me, the opposite. It's just been on a steady uptrend, okay? Here's something to think about, and this is where positioning comes into play. A lot of hedge funds, a lot of CTAs, which I used to work for, are systematic, and right now, at least on some of the data that I've seen, they are short the US and they're long Europe. And this disparity is one of the largest on records. It's not very often you see, especially the German stock market, which is very connected to the US market, vastly outperform the US. So what would hurt, the market loves to hurt the most people. And with so many different hedge funds, you're talking about a lot of money piling into these, the same trades. What would hurt the most people? What would hurt the most people is if the US kept declining, Germany and Europe, even, you can throw Japan and China in there, they rally, okay, and they get even more leverage, more on their positions, and then the opposite happens. US starts to outperform, Europe starts to underperform. All these hedge funds have to cover their position in both directions. They have to sell their Europe, they have to buy US. That would create even more volatility. That would create, an even better opportunity. So that's something that I'm looking at. Could we trade some? Yeah, we could trade some. I'm going to look at that, but I'm really just focused on the U.S. stocks right now, because we could see that inversion where the U.S. actually starts to outperform, and Germany and Europe and Japan actually underperform. Generally speaking, I don't like to be long and short, at least in this service. Okay, I'm either going to be bullish or I'm going to be bearish. So that's kind of how I'm playing that situation. But that's a great question. If we make that low you're referring to, will it be melt up or sideways action? I think it would be a 100% melt up. Okay. Again, and melt ups have these sharp downturns, and then they keep going. So it's not going to be a smooth ride higher, but it would definitely be something where we'll have a great opportunity to trade a huge rally. And again, a lot of people are short the U.S. That's something where they are forced to cover. We kind of saw that on Monday. Hey, tariffs aren't that bad. Boom, and everything rallied. Okay, so that's the type of market price action that I love. Nvidia had a major downturn today. Is this another wave? Yeah, I just covered that. We can look at that again. Let's see here. Where are we? Nvidia. So I think this is what's important. And again, this is what I just highlighted. So we had a move today lower. Let me get rid of this line. All right. So is this the first wave up, and we have the second corrective wave, down into, let's call it today, let's call it Friday, whatever it might be. Let's put a Fibonacci retracement level here. Okay. So we have a gap here, but this 111, let's call it 111.60, 111.50. If that holds, and then we rally above that 120, call it 123 level, this would create this wave 3 breakout, and that would be a strong move to trade. Now, if that doesn't hold, okay, let's say the 111.50 doesn't hold, and we get this drop, okay, then we're looking at probably more volatility, but we get that low into earnings into April, and to me that's a buying opportunity. What do I think about GME? So this is the meme stop. This is GameStop. It was all the Robin Hood and the I forget the hedge fund guy's name who was short, and he got squeezed out and all this other stuff. I just don't get involved with this stuff. Okay, the options market got pretty crazy there for a while, and you could sell some deep out of the money calls or puts depending on what you want to do, because the premiums were so high, collected in. But this is a video game store that is a brick and mortar video game store. I mean, you can just see it's just a mess. All right. It kind of looks like a irregular heartbeat. Okay. There's really no rhyme or reason to it. I mean, I get the positioning. I get, the company had, they used some of the popularity and all the money that infused to the stock to raise debt and do all these other things, but it's kind of just come back down to I wouldn't say it's normal price, but certainly not where it exploded higher and everybody thought it was going to go to $1 million and make $1 million, and a lot of people lost a lot of money. It was a shame to see, but I wasn't surprised at the same time. But this just isn't something that that I'm going to trade. I'm not going to trade this. I'm not going to trade AMC, the movie theater, a similar type thing. It's just something I stay away from. What would negate an upturn? Well, yeah, that's something that you have to take into probability or into account in terms of being wrong that you're not going to get this. But obviously, if we saw inflation come roaring back and the tariff situation got completely out of control, where reciprocal tariffs were going back and forth, that would obviously negate that. I specifically believe that won't happen. We've seen, I mentioned this last week, I believe, oil's below 70, we're hovering around 70, egg prices are coming down. I think that's what we'll see in terms of the inflation data later this week, okay? How do we factor in what happens with inflation and then the tariffs, but clearly the downside or the risk to my argument that we will see a low, and whether that's April or then, we get a rally first and then drop into, June, July, and then have this huge rally. That would obviously be negated with an escalation in tariffs. If Russia and Ukraine can't come to some type of agreement and you have the tariffs, obviously that's the worst case situation. But based on time, based on some of these cycles, based on this long corrective move that we've seen in semiconductors, okay, and the strength that we've seen in financials, I talked about that at the beginning. The market to me doesn't, at this point, the probability tells me that I'd rather be long than short. When to play leverage ETFs versus options? That's an excellent question. Well, when I'm patient, okay, when I'm looking for these setups, especially when we have this wave 4, that is where time becomes is against us when we trade long options because of time decay, because of theta, Greek theta. Okay, so at the beginning of March, mid-March, I bought a little of the triple ETFs just to say, hey, just in case, this is the low and we have this rally up into mid-May, I at least want to be long, and we can manage even if we get down into late April. That those aren't going to be affected. They're not going to hit our stops as much, so I'm not concerned with that. Okay, and the options that we do have, this is something where we'll simply roll. I gave us plenty of time in those options as well. So it's tricky because you have to take into account what are the scenarios. Okay, and when you have these long corrective moves like we have in SMH or AMD or Nvidia, even Caterpillar, you have to look at what the scenarios are likely to be and then say, all right, do I just want to own the stock or buy ETFs, or do I want to trade the options? Thoughts on SMCI? SMCI had a nice move last year. It really took off with semiconductors. And then this topped on March 8th, the exact same day as advanced micro devices, and it's had a similar move, okay? It had this parabolic rise, and then has had an equally, it actually made new lows below this breakout. So this is something that I'm keeping an eye on. Do they try to take market share from any of the other leading technology stocks? That's going to be the question that I think a lot of investors have. Now, when I just look at this pattern, right off the cusp, okay, this to me looks like this is a fourth wave, and then we could get a fifth wave down. Does this correlate with what's going to happen in Nvidia, AMD, SMH, maybe a TSM? That's something that we could certainly look at and certainly trade. But right now, I'm just looking at SMCI. What is going to happen to our existing TQQ calls? So we have June calls on here, June expiry, okay? If we have this rally into mid-May, which would be sharp, we can take profit, okay? If we have this drop into late April, all right, this is where I'll roll it. That's the game plan. Can you talk a little bit how first-year presidencies compared to second-year presidents after you have the policies that are being implemented by the administration? Well, second year presidency is after you have the policies that are being implemented. I think the market, again, I mentioned this at the start, what is the market going to discount in the future? Okay, is the market going, I think this is where the tariffs and then earnings, okay, inflation, those three things, especially as we come up into March and, or, into this March, April, May timeframe, are the policies of trying to bring down inflation to be getting rid of fraud, waste, reduce government spending, okay? While at the same time, that should reduce inflation, but what are the tariffs going to do? We also know that since Trump took office, well over 2 trillion with a T, $2 trillion of investment has come into the U.S. Nvidia is building a $100 billion plan. Hyundai, the UAE just announced the $1 trillion. We just saw an energy company, Schneider, is investing $700 million in energy infrastructure in the U.S. So these policies are obviously going to be good, creating jobs. But what we have to figure out with, and maybe that's part of the second year, okay, what's going to happen with the Ukraine, Russia situation? Is inflation one, or is it going to be this rolling, fight? Okay, whether it's tariffs or just simply the fact of, during COVID, they just didn't get it right. Okay, so that's a good question. I think that remains to be seen. But what's important is that the market tends to discount what will happen or what has already happened, into what it's going to do next. Excluding oil, what do you think of energy? Well, I just think, I kind of just mentioned it. I just think that energy is it's never going to go away. We're going to need more of it, if anything, because of these the data centers, the chips. Okay, now you can see XLE. This is obviously correlated to oil. I won't get into oil, but you can see here, it really hasn't done much of anything since April of last year. Interesting date. It topped on April 12th, 2024. Okay, so this isn't something that I'm going to trade. Does this have to do? Honestly, it would, for me, it's more of a gauge of inflation. Okay, are any energy costs going up? Are they going down? That's something I'm going to look at with energy. One is an example situation through earnings that might point to continued lows beyond April. Well, I think if earnings, we'll see what happens. But again, this is more based upon time. But if we see, we kind of just mentioned it. What would negate that? It would, to me, the clear indication is inflation and the tariff situation. If inflation's not going down and the tariff situation gets worse, that's where my outlook would be negated. How do interest rates factor here? The last question, and that is probably the best question. This is an excellent, I'm glad someone brought this up. And I'm going to look at this from, we'll look at the 10-year interest rate. Okay, so here, this is what I think the bond market is trying to figure out. It hasn't really done much. Okay, we saw this huge move up, and this was, going back to August of last year. Okay, was this based upon the growth that Trump was going to get elected and we have it? Was it based upon higher interest rates? Was it based upon tariffs? What I want to see, and we had the Federal Reserve meeting, and they really didn't give much. They're on hold. We're kind of wait and see. They reduced GDP. They talked about inflation. They're not really sure. Okay, so let's see what the bond market is going to do. What I want to know, and what I think we'll get our answer with, is we have inflation data coming up, and then we have earnings. Okay, do bonds, let's look at it between interest rates. Do interest rates go down because inflation's coming down and tariffs aren't as bad? Okay, and stocks go up, so bonds and stocks rally together? Or do interest rates rise because the tariffs aren't as bad, inflation is moderate or holding on, but they're looking at growth? Okay, we have $2 trillion of investments coming in overseas, creating jobs, that's creating growth. Okay, now maybe the Fed's on hold, but what would surprise a lot of people, which is basically what we saw here, way back in September, the Fed cut interest rates, but interest rates rose. Is that a factor of growth going forward? That would, that's something that I don't know the answer yet, but I want to see how bonds react, especially into these time frames that we've been talking about with stocks. Okay, how do interest rates and bonds react with these other time frames? And we're going to see a movement. okay? But we have to figure out, and I'll trade TLT, okay? I just want to know, are we going to see bonds and stocks rally together, or are they going to be inverse of one another because of growth? So those are the factors that I'm looking at between the correlation of bonds and stocks, okay? So that's all the questions. I appreciate your time. One quick note, next week is going to be Thursday at 1, not Wednesday. And then thereafter, we should be in good shape. But next week is on Thursday at 1, and I'll send out a reminder. Thank you very much for joining me.